Hello, testing. Okay. Okay, hello, Futex traders and to the wider investment community. Just going to go through the weekly trading roadmap and the event and risks that we have this week. Pretty jam-packed week with a lot of events and some key opportunities I think we're going to find from a trading perspective. So we're going to go through some of the events for you guys now and then take a look at the Bund and the Euro Stocks futures markets to see how they're shaping up for what could be quite an eventful week. So starting off with Monday, we've got the European industrial production. Not traditionally a very volatile figure, but really the only figure on the day. I'm not going to be putting much risk allocation on Monday just because there's a lot more to trade during the rest of the week. Tuesday, we've got UK CPI and PPI inputs, so those are really quite important for anyone watching closely the BOE's monetary policy stance. Obviously, CPI has been very low for quite a long time now, pretty much near zero. So at the minute, the BOE is really waiting to see if we can get any sort of inflation that could possibly change their voting structure from what we saw last week was an 8-1 in favor of hiking rates, so only one was really in favor, which was McCafferty, which he's always been him. He's probably the most hawkish, but do keep an eye on these CPI numbers because they're quite important for that front. Moving on to the next figure for Europe is the German zoo survey. Hasn't been as volatile as of late, so do bear that in mind when you're trading it. But probably the most important figure of today, and actually I think the markets could be relatively subdued up until this point, is the U.S. retail sales. So obviously we have just two main figures up until the FOMC decision on Thursday, which is pretty much the biggest event for not only this week, but I'd say the whole month, what traders have been basically waiting for all summer. So it could be quite interesting to see what these last two big figures for the Fed might do. The U.S. retail sales has been notoriously, as of recent, a very volatile figure. And namely, if you look at markets like the Treasury bonds, they can get pretty whippy and crazy on this event. So do keep an eye on this. This is very, very key. The U.S. retail sales is going to be super important for the Fed. I think any numbers that are noticeably higher than expected, we might already start getting a little bit of extra pricing moving into this meeting, the Fed meeting on Thursday. Some pricing possibly for a hike. So remember, better numbers, bigger numbers are going to be a lot more volatile than somewhat misses, because the misses obviously the way the market's priced at the minute already shows that the market's quite dovish with respect to the Fed in comparison to the Fed. So really, the higher numbers are going to make the market move and shift further closer to what the Fed's kind of been talking about. Right now, it seems as if you look at the speakers and the main people on the Fed's board, it's kind of 50-50, undecided, but the market's pricing in a lot less chance for that. It's more along the between 18 to 22%. We've been kind of staying around that mark for the last couple of weeks. Chance of a rate hike. So do bear this in mind. It's going to be really, really important going forward. U.S. Empire Manufacturing is after that, and the U.S. industrial production obviously going to be less volatile, but do keep an eye on them. We also have very early in the morning on Tuesday the BOG policy statement and Kuroda's press conference. We've obviously had some comments out of Yamamoto saying that they could potentially, they said that this next meeting would be a good one for them to ease. We've seen the big devaluation in China, which obviously we've been waiting for other big central banks to sort of react to that. The terms of trade with a lot of these major economies and even the smaller economies has changed since the devaluation, and China is not only a big exporter but a very big importer, a big consumer on the world basis. So in that perspective, do some of these central banks start considering either cutting rates or further QE so that they can devalue their currency against some of these basically the renminbi. Also on Tuesday, we've got the ECB's Visco, a leaning dove speaking. Just keep an eye on these speakers to see if we get any sort of comments. But I think what was interesting, what I mentioned in the market wrap on Friday, was that ECB's Coor and Pret were starting to get a little bit more vocal. Their dovishness is starting to come to the forefront again, and usually when the speakers start getting a little bit more vocal, a little bit more active, it might mean that they're looking potentially to do some sort of action. Now, I wouldn't be surprised if by the end of the year they boast QE, they give QE a bit of a boost, expand the asset purchases or extend the length of the purchase program beyond September 2016. Do bear this in mind. The more they speak about this and the more it becomes apparent, we might start seeing a little bit more pricing in the market. We've already seen the Euribor curve start flattening over last week after the ECB's meeting 2 weeks ago. So there has been a bit of flattening in the curve, which means that it could be pricing a little bit of extra liquidity along the back end. But we haven't really seen that kind of pricing in the equity markets, which have been, as of late, relatively weak. So do bear this in mind. It could be quite interesting. Obviously, the more dovishness we get from them, the more chances of QE. We could get a bit of a spread between the U.S. versus the European equity markets. Something like we saw in the beginning of this year when they were really going for that QE program. We started seeing those big spreads being put on, so there could be a continuation of that moving forward. Keep that in mind. Wednesday, we've got the UK ILO employment rate, very important figure for the Bank of England again, so do keep an eye on that. We've got European CPI, that's a final reading, so it won't be probably as volatile. The second, and again, another important figure, I'd assume the market's probably going to be relatively not as, well, let's say not as volatile up until the US CPI figure, because I'd say they're probably waiting to see not only retail sales but the US CPI. If these figures, again, I say if this is a bigger number than expected, a much bigger number than expected, we could see some aggressive pricing coming into this FOMC rate decision. Now, what I typically notice coming into these very, very big event-driven risks, where something could potentially happen, the market's kind of on edge, usually on the day before or a couple of days before, you don't necessarily see a lot of market moves or aggressive market moves. It's usually a lot of squaring off. The market can stay relatively range bound, and it won't really move. I'd say 80 to 90% of the time it will do that. It won't really move that much coming into a very big decision. Obviously, granted, if we do get very big surprises out of the retail sales and CPI, then I'd say there could be some actual moves. But in the 10% of the time where the market does move and there has to be significant pricing in before the Fed or any big event-driven risk, let's say a fund, let's say a hedge fund needs to come in and just sell a lot of T-notes or sell a lot of 5 years, buy a lot of dollars, whatever it may be, it's very noticeable. So if you're looking to play a trend, if you're looking to get in with a market that's going to move a couple of days, or especially the day before, even on the day of the event-driven risk, bear in mind most of the time it doesn't really move all that much, and it's really quiet. But when there is movement, it's super obvious. So if you're trying to play for a breakout, thinking they could be pricing in, you're trying to play for a trend, just pay attention to your volume. It doesn't really matter what the profile might look like instantaneously, or what the candlestick chart looks like in the 5-minute or 30-minute. Just pay attention to the volume. If there's really good volume, there's more likely to be more volume behind that. So just keep that in mind. It's going to be really important going forward. And I think coming into this rate decision, because obviously if there's something big coming out, the markets and a lot of these funds, there's going to have to be a lot of money moving around, and it's going to move. There's going to be some big market moves, so do bear that in mind. Just before moving to Thursday, we've got the Riksbank release of the minute, so do keep that in mind if you're trading any of those Scandi currencies. Thursday, moving on to the biggest day of the week, we've got the UK retail sales, US building permits, housing starts, and Philly Fed. Not going to be putting too much risk capital around these events, just because we've got the main event later on in the day. So at 7 o'clock London time, we've got the US FOMC rate decision. Also during the day, around midday, I think with the S&B's rate decision. Do keep an eye on that. That could be interesting. The S&B typically, as we saw in January, acted right before the ECB acted. So I don't know if these guys just get tips from other central banks that they're about to act, but do bear in mind if they do anything that's a surprise. What does that what does that mean for the FOMC decision later if they do take some sort of action? To do bear that in mind. It's I think just something worth noting. For the FOMC rate decision, obviously, I'm not going to go through this in detail because Brannigan and Imran will be doing a very full and in-depth rundown the day before, so please do tune in for that at 4:45 on the 16th of September on futexlive.com. We're going to have a very, very full rundown of trade plans, analytics, and what we're going to be looking at for this Fed meeting. So do keep that in mind. Obviously, like I said, the market for this meeting particularly is not pricing in. The majority of the market is not pricing any sort of hike, so it's mostly priced quite dovishly. And coming into this meeting, really, you have to put in your scenarios for anything that could be an outlier. Something that no one's really expecting. Maybe the market might be expecting the first hike to be 25 basis points. What if they hike by 10 basis points or 15 basis points or even 5 basis points? It's something that we're not really used to. Maybe they want to normalize over the next 2 years by 100 basis points, but they're going to do it in 10 basis point increments, which means a lot more gradual hikes. They could do frequent hikes, but just the hiking would be as aggressive. It'd be a very slow slope, or very mild slope, not too steep. So do keep these scenarios in mind. It could be something that we're not really thinking about. And if there is such a surprise, what's your plan? How are you going to trade it? How are you going to execute on that moment? So do bear these decisions in mind. Like I said, do tune in. Futex Live on Wednesday. There's going to be a very great rundown on that. Friday, we've got the Canadian CPI, really the only data point on that day. But I'd say that for me, and I think a lot of traders at Futex as well, even though we'll be trading this, putting a lot of our risk capital into trading this decision on Thursday, I think it's worth keeping an eye and being very, very focused on Friday, because the big funds, the guys that really move the big money around, the fast money is going to be trading Thursday night in for the Fed decision. But the bigger funds, they're going to sit down, see what the Fed has said, see what the Fed has done, do their meetings. They're going to be in the office at 5-6 o'clock in the morning, holding a 2-3-4 hour meeting, seeing how this affects their book, seeing how this affects their positions, and then putting on their appropriate positions from there. How do they need to alter their portfolio? Do they need to buy more of something? Do they need to sell more of something? Do they need to change from equities to bonds? Do they need to move out of bonds into equities? So there's going to be flows, no matter what the no matter what the decisions. If it's a big surprise, there's definitely going to be very big flows on Friday, Monday, probably the whole of next week as well. So of the week afterwards as well. So do bear these things in mind. Friday, the next day, usually you get some really decent flows. Also bear in mind one last thing. If we get a really big move and the bunds, for example, have a big blowout together with the treasuries, whatever moves you get from US monetary policy doesn't really affect the European bonds as much anymore. They're not as correlated as they used to. There's more of a tendency to put in spread plays. So if, let's say, the bunds drop by a point or a point and a half, and we open just considerably outside of value just from what we were trading during the European session, do not be surprised if we just all of a sudden rally up 80 ticks a point right back up to where we started. These things need to be in your trade plans and be ready for these kind of scenarios. Also on Friday we've got equity OPEX, so there could be some interesting squaring up of positions. Obviously, if we do get anything interesting from Thursday, but overall, I think we've got a really jam-packed adventure and risk week. I'd say manage your money really, really, really well. And what we'll go through in a second now is the risk and money management plan. For me, Monday, I'm literally, I might put on one trade, if that. Put myself 5% risk allocation. Really no adventure and risk. I'm only really going to open up if I see a really good risk reward trade. Tuesday, I'm giving myself a little bit more risk together with Wednesday because of retail sales and CPI. The majority of my risk capital is going into Thursday's FOMC. So even though I put 35% here, this is pretty much going to be the 30 of the 35% is probably going to be just on the Fed alone. So that that 1 hour of trade. So do bear this in mind. This is how I'm splitting up my risk and money management. And then Friday, I'm looking at about 20%. I would have put a bit more on Thursday, but like I said, I do like to trade the flows on Friday. So do bear that in mind. Anyone that's trading these events, it's really quite important to pay attention to the next day. Now, if we take a look at just two markets for you guys really quickly, we're going to take a look really quickly at the Euro Stoxx 50 futures. As you can see, we've had that really, really sharp downturn. We made our way into this sort of wedge formation, and we spoke about, I think we spoke about in last week's roadmap, or if not, it was another one of my videos. These 33.27s, I think also Reg pointed them out, 33.27 28s. If you go back on this chart, you can see it was the very, very key high made in June 2014. It's a really, really key high in there. It's also been a cluster of lows right in there. So it did hold us off when we came up to that level, and we closed right back into the structure, right back into value. And we pretty much, I mean, not really quite got here, but we almost got to the other side of this structure. So really, I think it would make sense if we did actually test that other side of the structure, given this bearish close that we had, and the way we've kind of structured at the minute. If we just take a really quick look over at the weekly chart, just so you can see what that looks like. Obviously, it doesn't close as a red candle, but nonetheless, that is not a particularly bullish candle. Obviously, tested through, faked out, and then closed right back inside. So we're not looking particularly all that bullish. In fact, I think short term seems rather bearish at this minute. You can't really say it looks to be looking all that bright for the equity bulls in the European markets. But let's take a look what it looks like on the profile now. So we managed to close around this mark here at 32.10. If you can take a look, the first very, very striking thing that comes up here is the VPOC, the weekly VPOC, and the POC of the week at the same price at 31.96, I believe. 31.95 actually. So 31.95 is going to be your very, very big and important pivot for next week. I cannot stress enough how important this level is going to be, at least in my trading. So depends if you want to take this into consideration, but I think it's going to be extremely important. Now, if you take a look, second most important striking element is that after this, the next real area of TPO accumulation comes really up into this area here, which is the mid 30s and high 40s, or sorry, mid 30s and early 40s, 32 40s. Now, if you remember last week on Delta, I had 32.45 as the value area high of that week. This week on TQG, I happen to have it at 41, but let's just keep it at 45 because I remember it did kind of pay attention to it last week nicely. So for me, as we are right here, if we're going to have a relatively quiet beginning of the week, I'd say it would make sense if this market were to fill in this value area cave, as you can see, using 31.95s as support, and probably up until these points, mid 30s to early to mid 40s even, as resistance. Ultimately, you're capped on the week. If we're going to stay within value, is at 32.57, the value area high of last week. Then you've got moving just a little bit higher. I'm not going to be looking particularly at this level. I don't know why I have that there. Should delete it. Is this inside week break at 32.97, which we opened on that one day just below here, and then popped it, got back below it, and then sold off pretty much the better part of a point to the downside. So do keep an eye on this level if we get back up here, and then the high of the week at 33.28. Now, what's important is if we do manage to hold an offer, for whatever reason, below 31.95s, I think that's going to be really, really important, because if we start building value below this VPOC of last week, it's going to start showing that the market participants are actually willing to do business below this area, which means we might want to auction a little lower. Now, do bear in mind, for some reason my CQG is moving these ends from the previous week into this week. I've just taken that out. The low of the week is at 31.81s. The value area low of last week is at 31.87s. So from 95s to 87s, you want to look at the price action. If we can hold below these 87s, ultimately get below 81s, I think there's a very good possibility we could start auctioning pretty quickly down. You know, really looking for this potentially to test these 31.43s weekly lows. You know, below that we do have some good little auction areas around 31.21. If you split up this profile, you would see. Let me just add the splits there. You can see around these levels we've had some lows and highs posted in here on the half hourlies. Remove all those splits there, and then ultimately going down to these 30.66s. Very important level. We also have some swings coming in just above that between 66s and about 70.71. So do bear that in mind. It's a pretty nice little level before coming down to these 30.34s, which is swing low here, and 30.13s, the beginning of this massive buying tail all the way down to that low that we saw on that horrific day, 29.51s. So this is what the current structure of the Eurostocks 50 looks. I've given you a few levels to the downside. Ultimately, the context, like I just said, is largely laying on this VPOC. I would imagine initially, if we open in here, it's going to be using this structure as support and a floor. So, you know, initially at the beginning of the week, if we come here down here on Monday, I'm willing to buy this, just because I think there's probably a low risk trade in there, because if there's not really much volume in the market, I think it's going to have a bit of difficulty to get below here. Ultimately, if we do get below there early on in the week, I think there's probably someone in the market that really needs to sell, and in which case then we could start building a bit of a trend. So do bear that in mind moving forward in the week. Moving over to these buns now, just really quickly before we close this up. We've had a pretty decent move to the upside recently. This is my continuation chart. So obviously on the current deck chart, actually the highs that we just took out on the dailies were around 22s, if I'm not mistaken. They were around 22s to 25s. I've just put up this continuation chart just to bear in mind the importance of this level 154.95. That if on the continuation we've got two daily highs here, moving all the way back we've got our daily high here. This was the really key point in here, which we couldn't get above, and then when, if you remember correctly, anyone that was trading the buns, we got above here, broke back below it, tested the 96s, and then absolutely shanked. So this is a pretty decent little area, I think. Just because the market does remember these levels, it has them in the back of its head. So 95, 96s I'm looking at. Not only for that reason, but if we take a look at the structure on the market profile, you'll see why. Above there we've got the 155.79s and 156.49s. Really the only major levels I think we can be looking at. Everything else is really quite intricate, and we'll be taking a look at, obviously I think during our technical analysis streams we can look at those more intricate levels during the week on futexlive.com. Below here we've got this little gap. You can see it comes in around 154.08s to 154.11s. Obviously on the contract we're currently trading, if I'm not mistaken, I think it comes in around 22s. We'll take a look here. There we go, 154.22s. This is now a weekly market profile chart. So starting from the bottom, we've got the 154.31s weekly lows. And then this really big chunk, the week was pretty much all traded out in this region here, so it's a really big chunk of volume and structure I think the market might use as some sort of support structure if we want to lean to the upside. So really the structure starts 154.59 is value area low, VPOC at 154.75s, which could be pretty key, and then the 154.95s value area high, extremely important value area high, and also that really key level that I just pointed out on the dailies. So for me, we close at around 155.15s. We've got this weekly high here at 155.31s. I don't know why it's not showing that extra print there, but it's 31s. So if we open anywhere here, I'd say initially, as we usually do, we've seen this scenario many times where we open out of value, we get an early sell-off on Monday, we come down and we test the value area high, and if we cannot pierce within it, it uses this structure as support, and either late in the US session on Monday we get a rally, or come Tuesday, if we can still hold above here, we get a rally. So it's a scenario I've seen many times, and probably something I'm going to be looking for, to be honest, this week. So keep an eye on these 154.95s. Obviously, if we pierce below here and start building value within it, I'd say it'd be pretty prudent to just be looking for this market to test the 75s and probably even the latter end of the value area. So this is the structure currently in the Bund. Hopefully I gave you guys a bit of context of how to trade this week. Like I said, it'd be better off if you listen to the streams that are coming up this week on futexlive.com. There's going to be a lot of great streams coming up with prep, analysis, technical analysis. I'm doing a price ladder video for Tuesday midday. So really a lot of content, and hopefully you guys will tune in. And yeah, hope you guys have a great and profitable week, and we'll speak again on Tuesday, Friday, and again next week on Monday. Well, thank you very much for listening, and bye-bye for now.